of course, Akiko, Target and retail remaining the big story on this Wednesday.
Yesterday we were talking about Walmart. Today it is about Target. Seeing a big miss, earnings miss in its latest quarter. The retailer saying profit pressure was driven primarily by the company's inventory production efforts. Walking through the numbers here, earnings 39 cents a share and revenue of $26 billion. And Brian, if you compare it year on year, sales were down 90% from a year ago. But again, we've been talking about the inventory story for some time. In many ways, this was kind of, you could argue, a necessary quarter for Target, who did say, by the way, they're going to move aggressively to slash prices, clear inventory, so that they are prepared for the second half of the year.
Yeah, this is a really challenging situation because, on one hand, Walmart's story was very much same as Target heading into this week from the perspective that they were guiding in mid-May that, look, the inflationary story is going to have to force us into some discounting. That's going to hurt our margins. You saw boat stocks and a lot of other retail stocks take a spill 3 months ago as well. The difference is that Walmart appeared to beat those estimates that they had set earlier in May, and then their stock is essentially back where it was 3 months ago. But Target, very much a different story. They have not had as successful of a, I guess let's call it last few weeks of their quarter as Walmart did. And what's really concerning is that you saw many mentions on the earnings call of the consumer prioritizing value. For Target, the translation is they're going to have to do more discounting, right? Which you imagine is going to be the exact same thing that they were warning about in May, which is profits getting squeezed.
I mean, it's worth sort of backing up a bit if we're talking about the inventory, story to see how we actually got here. A lot of this was, to your point, shifting consumer habits. It was also about the backlog that we'd been talking about for, the first half of the year, end of last year as well. A lot of that inventory coming through, suddenly piling onto these retailers at a time when consumers are saying this is not what we want anymore. And so they have had to take some aggressive moves. That's reflected in the numbers we got from Target. But to your point, they are being compared against what we saw from Walmart yesterday, and those numbers simply weren't as strong.
Yeah, and I think that kind of what's really interesting here is just the overall scene, right? We also got some numbers this morning on retail sales, and the numbers coming in from the Census Bureau saying that retail sales were essentially unchanged from the previous month. And I think that when we talk about the overall story and the appetite of the American consumer to go shop at a Walmart or go shop at a Target, the story from the inflationary angle is still kind of a bit mixed, right? Because on one hand, you want to see strong retail sales because that means that we aren't falling into a sharp recession with economic activity going down the toilet. That's not at all the case from what we're seeing right now. Certainly it's flat month over month, but not falling or contracting sharply. But at the same time, if you see any sort of stronger than expected retail sales, maybe that says the inflationary story is still very much valid.
Well, that's it, because that price is baked in.
Exactly. So if you're a retailer like Walmart or Target, that's a really tough thing to forecast because, yes, we just got retail sales numbers for the last month. Can anyone say with any certainty what retail sales numbers look like in the future? It's a really tough thing to forecast.
Yeah, and of course, we've been watching month on month to see just where inflation is. But even if you compare it over the last year, I mean, that I think is worth noting. 10% gain, or it's 10% above levels we saw during the same period last year. By the way, gas station sales were up nearly 40% year on year.